Okay, guys. So this today I'll try to go through the week, like I said from last week. Sessions. I think about took about 4 trades. Normally I average anywhere between 3 to 4 trades per week. I might trade 2 to 3 days depending on the conditions, but sometimes the market is giving, so therefore I take more trades. But for the most part, I try not to take too many trades. So let me move this out of the way. All right, so I'm not gonna do a top-down analysis or nothing. I'm just gonna quickly show you, for example, if what how I approach this week. Um, let's see if we can. So Monday was right here. So Monday when we came, we mitigated this impulse candle, just a tip of it. So what I'll do, I'll go straight to the 15 minute, and then we will start on where were we? Okay, my first trade that was taken I believe was Wednesday. I think I took one on Tuesday, but like I said, I usually delete my charts almost every other day. So it may not still be there. Let me see. This is Thursday. This is Wednesday. Okay, so this one's still here. Tuesday's trade is still here. So Monday, I don't believe I took a trade, or maybe I did. It was a stop loss. I don't recall, but it's not here. Or maybe I didn't trade Monday. Yeah, I don't think I traded Monday. Yeah, I didn't trade Monday. There's nothing here for Monday. Okay, so let's get started, right? So we'll dive into the trade from Tuesday, but before I go into it, normally, because I've been getting some of the same feedbacks from some of you guys. Not everyone, but some of you guys been giving me the same feedback, which is that you sometimes you feel lost when you're in the chart. Sometimes you feel like you don't know where the market is going, or you just don't have an idea of the market direction. I personally believe structure will always save you. If you feel lost, just scale back to the higher time frame, like the 4 hour, and find the structure. Once you find a structure, it will make your life easier because if you know you're focused on pro trend, then you know what type of direction you're looking for. And if the market don't end up giving you that setup during that session, then you just didn't have a trade. So if I was in that session, I'm kind of lost and I'm not sure what was happening, I will say, okay, well, I could see that the price gave one strong push here. Let me see. Matter of fact, let me do it this way instead, since we're gonna do this day session. Let me do a bar replay and take out up until Tuesday. What I took the trade. So it'll be right here. So boom, I come into the session. I'm not sure what's going on. I'm a bit lost. I'm going straight to the 1 hour or the 4 hour. I want to see what's going on. What I can see, the first thing I'm trying to identify, yes, I can say, okay, price is coming off this 4 hour POI. So if I go to the 4 hour, we can see that there was this high right here. You always want to look left. There's this high right here that led to this low that broke this structure. So we have this BOS. And what do we know about a supply and demand? A strong supply is one that leads to a break of structure. Basic things. So if I see that, does this mean that this supply is going to push price all the way to the bottom? No, I'm not looking for that. Whether it is or not, is not going to happen in that trading session for that day. You're only going to get 20 to 30 pips in that day. So why are you worried about price going to need to come all the way down here for? That can take price can have so many different price actions. If let's say you're correct, price needs to come here, it's not just gonna shoot straight down here. It could come here, get close to it, go back up, all the way here, then come back again and go. It can do it in so many different ways. So you wasting time and energy trying to identify that it has to come all the way down here. So you're locking in your mind that needs to happen now. That's the wrong way to look at it. Instead, you say, well, if this high led to this low and it broke structure, and this is a strong supply and price is reacting from it, the first thing it needs to do is sweep liquidity if it's a smart money trap or an early seller's trap, this right here. So what would be the next level of liquidity that it needs to sweep? First would be this low, but what happened? It didn't just sweep it, it closed the body. Let me zoom in, because I think you guys can't see it too well when it's zoomed out. You want to say, okay, where's the first level of liquidity that it would need to sweep? As in like an inducement and then continue up if this is going to be a smart money trap. But what happened when it came to the first level of inducement, which was the last low that led to this high that caused the mitigation, price broke body underneath it. So you say, okay, cool. That one wasn't the level that is going to sweep. That one was there's a lot of pressure. Then you say, well, where's the next level? The next level will be this low, the low that caused the breakup structure of this high, the previous higher high, lower high that was here. Well, in this case, it will be a higher high because price was in a bullish movement here. So you say, okay, well, price needs to induce this with a wick for me to say, okay, we're no longer going bearish or towards this direction. We're going, and now it's going to turn around and continue up. But what did it do? Price didn't. Price closed the body. And now what do we have? We have this same low that led to this high has now caused a lower low that break underneath this zone. So what do we know? At that moment, anytime there's a break of structure, there must be a retracement. It's very important you remember the phases. That's something that I think in my mind every time I come in the market. What phase are we in? You always want to ask yourself, what phase am I in? Is it in phase 1 or phase 2, or am I in phase 3? And it's easier to do that when you're looking at the 4-hour and the 1-hour, because those are the ones where you're going to see the most recent, and 15 minutes too sometimes. But I scale down to the 15 minutes after I identify it from the 1-hour and the 4-hour. So now I'm on the 1-hour. We've already identified this was the 4-hour POI that we are reacting from. We already identified that this low right here, that was supposed to be the point of inducement for price to continue bullish, if this was supposed to be a smart money trap, has been broken under with a body. So we know price is still going to go lower. So coming into the session, you see this break of structure. That's phase 1 complete. Reveal of market intent. The reveal of market intent always leads to a break of structure. So if it leads to a break of structure, you come into the market, you see the reveal of market intent, you know phase 1 is completed because now the market has shown you what it wants to do. It's going down. Okay, but is it just going to continue down? No, it can't do that. It now has to retrace to a premium level because it's going down, so it's premium. It has to retrace to a premium level. So if you're coming into the session and you see price has begun a retracement, whether it does like a 2-leg protocol or does some move like this, even though you know pro trend, you're looking for sells, you understand that where you're currently at in the market is not going to be a sell session simply because it may be further away. The premium might be 50 pips, 40 pips, 35 pips away from where you're coming into the session. So you can't say, well, I'm going to wait for price to get all the way. I'm going to wait for price to get all the way to the premium and then I'm going to sell. You can, but it may not happen that session. It might get there and it's like 12:30 or 6 o'clock UK time. So now you can't even trade no more because it's after the key to kill time window. Now you're just going to have to wait till tomorrow to then catch a leg to the way on the way down. But you can still capitalize on the retracement because you know that price needs to fulfill phase 2. So that's why I always ask myself, what phase am I in? Okay, I can see right here from this high, because this was the last high, that led to this low, that broke this structure. Or you can identify this one, because this was the decisional that caused that break. Why is it a decisional? Because this was the last high, because after this push down, price retraced. From this retracement, this was the one that pushed straight through without any retracement. This pushed straight through without any retracement and broke underneath this low. So that lets you know that this was the decisional. The decisional is where price decided to break the structure to the left. That's why it's called a decisional. The extreme is the point where it began from, which was right here. Now, you're not going to say extreme is way up here because one thing I would say is we don't trade, you don't sell from higher highs and you don't buy from lower lows. Those are traps. Don't sell from higher high, meaning the highest point of the chart, and you don't buy from the lowest point. Those are always going to be traps. Because price either going to induce it for a lower low, for example. Let's say price wants to continue up from here. It's not just going to react from here and go up. It's going to probably induce it and then continue up. That's why you don't sell from lower lows. Okay, so let me continue. So from this 1 hour, I already said to myself, okay, this is my reveal of market intent right here. All right, boom. And price did what? Phase 2 now gets completed. So once you say you found the reveal of market intent, it's very simple. All you got to do is take your fib tool, reveal of market intent is complete, phase 1. You go to the high of the zone that led to that low, and you use your fib tool, and you find the premium. Okay, premium is right here. Price extended a little bit to 8.86, but the premium is here. So you are on the 1 hour. So I'll go to the 15 minutes to say, okay, where is a supply in there? So you can see on the 15 minute, when you use your fib tool, you can very much see inside of this discount, the 618 and 786, you have a consolidation. This is where you put all the context together of everything you've learned. One thing you know is if there's a high that leads to a low and it has a retracement, but this retracement does not fulfill, like this one, for example, this high led to this low and broke underneath this structure, right? You with me? It broke underneath this structure. You had a BOS here. So that's a phase one complete on that 15 minute. Understand the same thing happens on every time frame. Okay, so we got this phase one complete right here. Reveal of market intent. Why? Because it broke the low that led to that high that broke above this previous high. So now price revealed that it wants to go down by closing a body on a higher time frame, such as the 15 minute. So what does it do? It retraced. Phase two began and it fulfilled a premium level. So you know that this is a strong supply because it retraced and pushed lower. So now you know this high is protected by this high now, simply because it retraced to a premium level. So now you look at something like this one. Now I could delete this. You look at something like this high that leads to, you could say, I wouldn't say this low because this low didn't break underneath this one, but it leads to this range and it consolidated. This consolidation then pushes down to the furthest low, which is right here. So then you'll say, okay, this is your actual low, right? Cool. Now, when you see 786, 618 in this range, and you see there's a consolidation, you know price wants to go deeper into the zone simply because there's no order block, there's no liquidity, there's no form of entry model, there's nothing here for us. You can go to the 5 minute perhaps and try to foresee something, but there's nothing here. You don't want to look at something like this and say, oh yeah, this is my 5 minute order block. I'm going to try to position myself for it. Granted, price reacted from it, but you don't want to position yourself. What time it happened? It happened at 3. So this is after our kill time window anyways. So this is, you're not even in this trade. So if you see price mitigating this after kill time window, you know this zone is not going to hold. It's happening after the key time. So the next level of liquidity is this 5 minute supply, or you go on a 15 minute high time frame supply, this 15 minute supply right here. Price comes into it, not even during our time session, during Asia, mitigates it right there, right before London Open at 2 o'clock, which would be 7 a.m. for UK. And price pushes down and breaks underneath the same low that led to that mitigation high and broke structure. So now let me get into the session now. So if I'm coming into the session knowing that phase two has been completed. So this is where you add the context. Hope I'm not going too fast. If I am, please let me know, but you guys keep up with me. Like I said, I identified my reveal of market intent here. Cool. I know that phase one's complete. And now I identified the phase two has been completed. And I'm coming into the session. If I know phase two is completed, price then pushed down here and it's reacting from this imbalance. Go to the 15 minute. Price is reacting from this imbalance. Now this is a low that led to this high that broke above this structure. Now, does that mean to me that price, because this phase two is complete, price reacting from this supply and comes to this demand, that this demand all of a sudden has to push price all the way up here? No, not at all. The thing you have to know is when you're approaching a demand or a supply that caused a BOS on a higher time frame, like a 15 minute or hourly, even though it's going to fail, price has to react from it. The reaction can be just to go sweep liquidity. It may not be a reaction to go change the whole market direction. So this is where you factor in your session. What session are you in within that session? What is the most probable to happen within that session for you? And has to also align with your trading model, your entry models. So yes, now I just now remember this session, Tuesday. I did take a stop loss on Tuesday. Remember, I took the first stop loss. This is where we were speaking about the sacrificial lamb that leads to the actual trade. My first entry was, I believe, from somewhere here. I think I took a buy somewhere here because this low led to this higher broke structure on a 15 minute, I believe also. Yeah. This was a 15-minute BOS. So I wanted to see price come take this equal high, even though I know we were supposed to still be bearish because of phase two being complete. So now we're in phase three, which needs to push all the way down and break underneath this low. In my session, I saw that price is coming into this demand, which was a strong demand. It was a low that led to a high that caused a BOS. And it was reacting from this range. Now, I knew that I could probably get liquidated because of this relatively equal low. But at the same time, I felt that price was more likely to at least sweep this trend line and these equal highs. So that's why I took the buy from here, from this demand. I took the buy from here and I was hoping, targeting that price would take this out and continue to induce this equal high and probably tap into this imbalance because we had this imbalance here, which would mean price would sweep a little portion of this trend line and then this could be enough to push down. That was my anticipation because there's liquidity resting here. But price took me out. But that doesn't mean that I changed entirely my mind. I could have waited for this entry model here when this next break of structure happened, the next reveal of market intent right here. I could have waited for this retracement because as you can see, let me move this down. Once you have a reveal of market intent, all you need is your fib to identify the range. And you can see above 50%, price, the institution will react. What's going on? Why my screen? My connection. Okay. Okay, so I didn't wait for that. Instead, I reacted with price action in my session. In my session, what did I get? In my session, I get a mitigation of this imbalance. This high time frame imbalance, if you didn't see it, I'll quickly show you the imbalance so you can see where it was at. This high time frame imbalance here. Look, this thing moved too fast. Look to your left. We have this low, price from this low, it pushed up here, slight retracement, and this low pushed above and took out the Asia high and these internal highs. This is on a 15-minute. These are 15-minute structures being swept. So when price comes back to that zone, I anticipate a reaction from this imbalance. Even though we have a bigger imbalance here, I'm still expecting a reaction from this imbalance. Now, I don't take the trade aggressive. I didn't just, once it tapped the imbalance, I entered the trade. No, I waited for confirmation. I preach this to you guys a lot. When you wait for confirmation, you have more confidence in the trade and you're more likely to get to your TP fast unless price action decides to move slow, but you're more likely to have a better result and your psychology is better. So what happened here? Price mitigated. One leg, retracement. Two legs. The minute the second leg breaks above the retracement of the first leg right here, the minute a body, not a wick. See this wick right here? If it would have retraced from this wick, I wouldn't have taken it because this could have just been a inducement of these highs. Take those liquidity of these, and this could have been an unintentional movement, basically. I'm sorry, this would have been the unintentional movement. Price would have gave this as an unintentional movement if it would have just did a wick. This would have been an unintentional movement, liquidity sweep, and dump. Price could have easily taken them out. So instead, what I waited for is a body. So what happened? Price closed the body here. As soon as this body is closed and I see that price is retracing, all I have to identify is the lowest point. You want to enter your zones with a sweep. You want to see something get induced into your zone. You don't want to just get into your zone, price just comes in, tap me in and take off. That's chances are it's going to come back in and induce that tap. It has to induce. Inducement is what drives the market. That's the liquidity that the market needs. So what I did, I identified this low as my inducement low. This right here. This would be the smart money trap that would need to be induced in order for price to mitigate me in this demand right here. And that's where I position myself. And price came in, swept this low, mitigate, and I took the trade just to target this high for a 1 to 3. And all of the build up and all the long take time happened, and then it went and hit TP. So this model was not unintentional. I'm sorry. This was a two-leg protocol. So let's go into what I call the trade confluences. For those of you who says you get lost out there, it's because you do not have a trade confluence list. If you don't have a confluence list to check off on your boxes when you're trading, you're going to take any trade, or you're going to feel like trades are happening and you're missing out. Can you guys read this? Do I need to make it bigger?
No, that's fine. I can read it. We can read it.
Okay, I'm just making 20 and just in case. All right, look, it's very important. First thing I ask myself, am I in a continuation or a reversal? We've gone over this. If I'm in a continuation or reversal, that's almost the same thing as what phase am I in, phase one or phase two. Okay. Now, the main purpose of continuation or reversal is more so if I'm coming into a New York session and the opening of the session 9 a.m., we didn't have a medium inducement. A medium inducement is a sweep of a previous day low or a previous day high or a previous day or previous week low or previous week high or a previous day structure, high time frame. So if we didn't have any sweep of those, then I know I'm in a continuation of where the overall market direction is going. So that's very important you understand that. So the time-based manipulation, that's very simple. You just want to make sure you're within kill time window. That's nothing crazy. It just has to happen within that 9 a.m. and 12 p.m. That's all the number one is, kill time window, which is the most important one. That's why I put it as number one. That's the most important one. Yeah, I got you in the medium inducement part. It says, would you classify medium inducement as also a previous session low or high? Yeah, previous session low or high. If it's the same day, no. Meaning like if we're in New York and it sweeps a London session from the same from today, no, that's not a medium inducement. That's just a sweep. It has to be previous day. So if today is Friday, it has to sweep a Thursday or a Wednesday or a Tuesday or last week's Thursday. It has to be within previous day. Can't be the same day. So like I said, with the time base, this is the most important one. If you have everything else here and you don't have number one, don't take the trade. Number one of time is the most important because if the institutions are not there, the market is not going to push all the way to your direction. You may see sometimes that it does make those reactions and market does get to but those are not your high probability trades. 9 out of 10 times is going to reverse. So that's number one. Number two is after the mitigation of a high time frame supply or demand. This is why you wait for confirmation. Because if I would have just came here and took this at the top, possibly, first of all, it would have been a big zone. It would have been a very large zone. 5.2, it's not that big actually. 5.2 is not bad. But I'm not taking it at the top. I don't care if it's a imbalance, if it's a supply, whatever, I'm not taking it. The reason I can take trades from any the reason I can take trades from any mitigation, whether it's a imbalance or a supply or a demand, is because I wait for confirmation. If you don't wait for confirmation, it's like Russian roulette. You're taking a risk on that zone, hoping that this zone hold. I'm not hoping when I take this trade because after the mitigation happened, it gave me an entry model that lets me know we're going to go the other way. That's why I say you only need two types of entry models. You don't need 1,000. There's so many, but you just need two. And I'm giving you guys the two of the most consistent one that I see and that works for me is the two-leg protocol and the one we all learned, change of character, break of structure. So you only need those two. If you master a two-leg protocol and a change of character, break of structure, you'll be all right. Just wait for a confirmation. So what did I do? Tap, one leg, two leg. On a two leg, you know that price needs to come sweep liquidity. So you're not gonna take it at this demand. You're not gonna take it at this big old imbalance. You're not gonna try to go to 3 minute and try to find something within the 3 minute and says, oh, there's this big old demand here. I'm gonna take it and cover half of it. No, you're gonna let price give you a sweep. And the sweep will be the point that led to the breakup structure, most likely. The last low that caused the second leg is usually going to be swept to give these buyers FOMO that price is no longer going to be bullish and they get taken out and they try to get sells right here. They're going to price comes up, they try to sell and it fakes them out and then takes them out. So they get stopped out twice because they see the body close here and they're thinking this is it. And really what happened for you is this. Price mitigate your demand. So that was that trade from Tuesday. So now I won't go do the whole back to high time frame stuff again that I just did. I'm just going to carry on from here. So now knowing subconsciously that we're supposed to be going bearish because phase two was completed, right? On this retracement, right here, we know that phase two was completed when price came from here. This was phase two when I took this buy to complete this phase two. I know that overall, we needed to come all the way and break this low anyways. So what is my next step? I can move this. Actually, let me finish explaining this. The change of character breakup structure you guys saw. It was a two leg instead that we got. The third one is the impulse candle, but I don't take a lot of those as I used to before. Lately, I've been seeing more of my two legs and change of character, so I've been more prone to taking those two, and I decided I'm just gonna stick to those two. Sometime I'll take an impulse candle entry if it shows itself. I think Naila took one this week, and it was very similar to my same change of character break of structure entry, but she just entered from an impulse candle, which allowed her to get in much earlier than I did because she chose the impulse candle. So that's why having any of these three, just two of them you'll be fine. One of them you can be profitable, but with three, you will be fine. Next is liquidity targets. You want to see what liquidity you're targeting when you're getting into these trades also. So for me, in this case, I knew I was targeting these trend lines. I'll try to go quickly into this zone. When price mitigated my entry, I knew I had this smart money trap here, smart money trap to target. Um, and as price was building more liquidity to sweep, of course, so I kind of see as it was continuing. So majority of my focus was on the smart money trap. So that's why you see in the list here, I put these liquidity that I want to target. This is highly important to have all three. As you see, I wrote here. If you got two out of the three, it's not good to take it. If you got time-based, you got after mitigation, but you don't get a change of character, break of structure, or a two-leg protocol, or even an impulse, you're not trading. Don't do nothing. If you get a mitigation of supply, you get a change of character and a two-leg, but it's not in the right time, it's not before within the key time window, whether that's London session or New York session, don't take the trade. It's just that simple. And if you get a time-based manipulation and a change of character, breaks of structure, but you didn't mitigate a high time frame supply or demand, that one is just risky. And this is your smart money trap because the high didn't lead to a break to the downside, right? Yes, exactly. This high right here did not break this low that it originated from. So the minute I mean, I knew it was a smart money trap for more than just that, simply because I identified a two leg. We were coming from this demand. Even though it's an imbalance, I classified it as a demand. So invalidation model already lets me know this will fail, simply because from this high, we came back and mitigated this demand again before we came back to this. So that's one reason why it's a smart money trap. Second reason is because, yes, this high did not lead to a break of this low. So that's the second reason it's a smart money trap. And third is because the price gave me a entry model for the buy, which is the two leg. So I knew that this mitigation or this break underneath with the body was not a real break of structure. It was just a break of structure to mitigate and then for us to push up. So yes, that's why. And then we knew that there was this demand. Now this is actually within 50% range. So that's the reason why you see I had this right here marked as my retracement level, but price reacted from this one instead. It's above 50%, and there's an order block right here. This order block right here. This is where price reacted from. And it melts from there. It just consolidated and eventually melt. So now you've got my confluence list. Just get something like this for yourself. You don't have to do it exactly like mine. You can refine yours. You can just stick to one of these two. Find the one that's best for you, the one that your eyes is most conditioned to. But when it comes to these two right here, number one and number two, that's a non-negotiable. Like if it's not coming from those, it's a very hard chance to take it. And you'll see what happened yesterday's trade, Friday's trade, where I took the trade and it wasn't from a high time frame supplier demand. I had a different context as to why I took it. And as you can see, price did not even hit my TP. It just really consolidated, which caused me to close the trade towards the end because I was at a meeting and I just didn't want to keep the trade running. And it was Friday. Okay, so now we're here. So price consolidated, caused the finally did the break of structure. What is this again? We just talked about it. Phase one, from this high to this low. But this is not the high that caused the break. This one was. This was the decisional that led to the break, and this will be the extreme. So what happened? If you see price do an inducement, sellers are in control right here. This inducement leads to a break of structure. This high was created in Frankfurt. I know a lot of you guys had questions about this. Let me make it bigger. A lot of you guys was concerned saying, wait, why would you trade this zone? It's in Asia. Asia high is not yet taken, and it's created in Frankfurt. I said this to you guys before. If the zone is created from Frankfurt, but it leads to a break of structure, it causes a significant move, price will respect it. That's where you have to factor in everything you understand about context. This high led to this low, right? This high led to this low. Within this range, this is your fib level. But what happened? Price at the opening of London, if you was gonna say, well, I want to wait until price comes into this area to sell, you wouldn't have because look at the time it came, 5:30. You probably would have taken that sell, but you wouldn't be targeting this low because towards the end of the session, you would have only want to target the bottom of this consolidation range because that's your next level of liquidity. Remember what I said? When price mitigates a zone, before it comes down to the break this low, remember that if it's not ready to come all the way down yet, it's going to sweep the next level of liquidity before it pushes up again. If it would have came here, close a body, then you would know, okay, I can hold my trade and let it continue. But if you're in a trade, this is how you trade manage. If I'm in a trade, this trade here, and it's 6 o'clock, 7 o'clock, I'm still in this trade, and I see this is just a sweep of the previous range, and price is pushing back up right here and it gives me one leg, two legs on the push down of the sweep. Same thing happened here that I was just talking about in the first trade. As you can see, it's like clockwork. It's going to give you the same look. It's all about a look. If you start from getting familiar with the look, after the sweep, you can consider sweep almost like a mitigation. After the sweep, it took all of this liquidity. What's going on with my internet? It took all of this liquidity. It gave you one leg, retracement, two leg that broke a body above the first leg. What did I say? Before it mitigates, it needs to have a sweep. And where's the sweep? The body, the last low that led to the break of that first leg is going to get induced into the zone, mitigate, and then it continues to push up. It's very simple. It's just how a two-leg protocol works. In other cases, which I think we'll have another one, so I don't want to jump into it. I'll show you during the trade. So this was this trade on Wednesday. So we came off that. We broke structure here. We know that we retraced. Price fulfilled the complex pull, or not complex pullback. I'm sorry. Price fulfilled the retracement. Phase two. This was phase two. What does phase two say? It's price retracing. Phase one is the reveal of market intent. Phase two is confirmation of retracement through change of characters, break of structure. What is price doing here? It changed characters here, broke structure, came back down, push up again, break structure, until it finally reached a what? What we always mark, what I recently spoke on, a high time frame supply in this case. How do you know it's a high time frame? You go to the 15-minute and you see, was there a structure on the 15-minute? Where's Wednesday? Right here. Boom. Okay, it was a 15-minute high that led to a low that broke a 15-minute low. Very simple. And what happened? Price came into it. This mouse is crazy. Price came into it and gave me a reaction. Does that mean I'm going to take the trade immediately at the top of this zone? No, because we wait for confirmation. So where was my confirmation? I think we had news this day. So where was my confirmation? Confirmation was right here. Price, mitigate this zone. It dumps. The first time it dumps, but only did a liquidity sweep into that zone. As a matter of fact, I took two trades in that zone. I took a buy first, and my buy hit stop loss. This was the buy. It only hit stop loss because I thought that my prop firm that I was trading this one on, I didn't trade this one on a live, I did on a prop. I said, I didn't know that I had news trading. Some prop firms allow you to have news trading. So I did not know that I had news trading, so I didn't close the trade because it was within the time. You can't close the trade 5 minutes. You can't close 5 minutes before the news or 5 minutes after. So otherwise they penalize you. So I entered it from right here. This was my first buy. Why did I enter this buy? Because I felt like this zone was going to get mitigated deeper or at least fail to come into this higher zone. I wanted to see this zone get swept and mitigate here. But just because I want to see that, that doesn't mean if price gives me a different setup, I'm not going to change my bias. I'm not married to no analysis. I just want to see that because that's what looks more probable. Because why? I came from this sweep, one leg right here, two leg, broke a body, price came, did the inducement, pushed out, broke structures above these highs, and right here, it broke a body above this previous high right here, a body right here. So when price is retracing like this and it's leaving a trend line, immediately I'm thinking, okay, break and retest traders was taken out right here. Price invited break and retest traders right here. You see it tap, wick, keep them in, fake them out, mitigate, finally takes them out now and started inviting trendline traders in. So I know the trendline traders needs to be taken out. So I entered from here. I think it was like a 3 or 4 pip stop loss. It wasn't a big zone. I entered from here, yeah, a 3.6. I entered the buy from here, and I was targeting Asia high. I was targeting Asia high, and price came in here, pushed back into my zone. This was the news, and pushed me all the way back up again. I was still in this trade, and I could have closed it, but I couldn't close it by the time it reached right here. It was after 10. I'm like, okay, I'm so close to Asia high. I might as well just wait for this liquidity. And finally, price came and took me out. Why? Like I said the other day, news candle. Both sides of the news candle must be swept. This was the low of the news candle. It hasn't been taken yet. And this was the high. Price came, took the high. So therefore, it had to come take the low. And that's why I got taken out. After it took the low, it caused a break of structure here. That was my confirmation. This leg got broken, so you had one break of structure or change of character, you could call it, and push down, break of structure, break of structure. That was my confirmation for a sell. Price retrace. I had an imbalance here and a sweep of a order block. I entered from here. Same thing, target on 1 to 3, and price just took forever on this trade. This was mad. But finally, price ended up giving me the trade towards the end of the session. So that was on Wednesday trade. As you can see, confirmations. Even though I took one sell, buy that hit stop loss, that didn't stop me from still looking for opportunities because we're still in a trading window. There's still opportunities that's gonna come. I just have to wait, right? I didn't force it. I waited for price to give me a setup that looks conducive to my entry model because that came from a high time frame supply. After a high time frame supply, what do we wait for? Two-leg protocol or change of character break of structure. What did we get? We got the change of character right here and a break of structure. That's it. Just that simple. Had it not changed character or break structure, then I wouldn't have entered. But because it did, it gave me what I'm looking for within my trading confluences. It aligns with everything. I have trend lines to target. It mitigated my high time frame supply. It's within key time window. It's 1040. And the last thing was, I believe, don't recall what the last part was. Oh yeah, the change of character break of structure. So we had that. So that was my trade confluence to take that trade. Boom. And next was the three trades. I know I got a lot of questions about this one. This one was a very, very interesting session. So let's clear up it again. We're coming from, since this is the last one, or the one before last, and that's so that we can do some questions. Coming from this last trade that took forever, we know that price led to a BOS. Then price retraced and mitigate. This was all during London and caused another BOS on a this was on Thursday, caused this BOS. So now I can see on a high time frame, this low, this 15-minute demand led to this high that mitigated. This was the phase completion of the phase one, as you can see here. This was where we had the reveal of market intent. The phase two was completed, and now I can see phase one, the repeat of market intent, the reveal again, was once again completed from this high. So I see price break this structure. So now what am I anticipating? We have this big old trend line here. One of two things. Price is either going to have a retracement from here all the way up here, or price is going to have a retracement to this most recent change of the last decision, or this high that led to this low. So am I going to take this trade and target all the way up here? No, because at this time, it's not for me to decide. I have to let the markets tell me if it's going to go that high. I'm just focused on my 20 pip, 15 to 20 pip that the session is going to give me. So I'm not going to marry the analysis. So let me get into that session. So when price came in, market opens up. What do I see? And these brown dots represent 15-minute structures, by the way. So if you see those, know that that was from a 15-minute high that led to a 15-minute low. Okay, so now let me make sure this is clear to see. And I think this might not be. Okay, it is. All right, boom. So what do I have here? I have this high that did an inducement sweep. Price built up these liquidities here, pushed down, came up, induced it, and then lead to a break of structure. That lets me know this is a strong supply. You want to see inducements. See this right here? Price built up, came up, induced, and led to a BOS. And it came back, it respects it. Inducements would represent a strong supplier demand if it leads to a break of structure. If it doesn't lead to a break of structure, it's not a strong supplier demand. So you wanna mark out your zones, your supplies and demands where it has an inducement. Those are the ones that are more likely gonna hold. Okay, because liquidity was taken before that zone was created. A large amount of liquidity was taken, and then it led to a break of structure of significant levels. So that's why it's going to hold. So now when price comes down and gives me this break of structure, first at 851, it gave a fake medium inducement. I know a lot of people thought this was a medium inducement, but the time. Remember I told you time is key. So at 8 something right here, 8:45, this wick happened, taking this previous day low from Monday. That's not a medium inducement. It's just a sweep of liquidity. And it's a previous day low that was swept. So from that zone, what did I pay attention to? I said, okay, if price is going to react from this zone, it needs to give me an entry model. Because remember, an inducement can sometimes work as a mitigation if it takes significant levels. So for me to respect it, it needs to give me one of my two entry models, two-leg protocol or a change of character breakup structure. So I'm on a 1 minute. After this inducement at 850, price didn't give anything. It pushed up, it consolidated right here. As you can see, it consolidated right here. It even left a little equal high within this consolidation. There's these level equal highs here, and then it pushed up. Even if you try to fib it, you'll see that it didn't even come to a discount range. It didn't even reach 50% and pushed up. So you know this is not a real retracement for one. You know this is not a real level for two, and you know that this is just a retracement because this high led to this low, break this structure. So you know this is just a retracement. So it's not going to be a assumption to buy here. But when price came down, swept this low, break structure, I'm like, okay, maybe we have something here. From this BOS, price mitigated into a daily demand. I believe on a daily, I don't know where it went. I had my daily demand marked. We reached a daily demand. That's why you not always, but you want to keep an eye on your higher time frame supplies. Someone asks also what happens when price, you don't mark out your daily or something like that, and price comes into it, and you're waiting for it to mitigate a lower zone, but it doesn't. Those types of situation, because I have my daily mark, it doesn't happen. Those lower time frames, I don't have to wait for it. So here's what happened. So price came, where's that session, that trade? Right here. So price came and mitigated this daily zone right here. Okay. It mitigated the daily, just a tap on the daily. Once price tapped this daily, I know this is a huge zone. Now, I'm anticipating for this daily to fail because it is a lower low. But I know that we're going to get a reaction. Like I said, if it's a significant low that led to a high that caused a BOS, yeah, for news, both sides, I'd rather wait for both sides to be swept before I take one. I'm not going to decide which side's going to get taken out first. That's that's um That's danger. Okay, so price mitigates this daily demand. Now it's what? 9/20/2022. I need to now wait. So basically, first thing you should do when you have your high time frame supplies or demands marked and price comes into it within your key time window, you've already identified the direction that you're in. You know that phase one was completed, or you're in phase two, and you know you're gonna buy to continue to fulfill phase two, or you know that you've finished phase two and now you're about to repeat phase one again. So, you know, you're looking for a sell. So now you're waiting for price to come into your supply. As soon as price come into your supply, you find that high time frame supply that led to a low that caused a BOS. You make sure that there was an inducement within that supply because that lets you know it's a strong supply. In that moment, you just look at your trade confluences. Am I within my key time window? Yes, it's past 9 o'clock. It's 9 something. Okay. After mitigation of a high time frame supply or demand, did I mitigate a high time frame? Yes, I did. A high time frame demand. Cool. So check one is done. Check two is done. Now I need to see a change of character or a two leg. That's it. It's highly important to have all three. So I know I have the first two. Am I going to get the third one here? What did I get? One leg, push down. Two leg, but did it close a body? It did not. So what? I'm not going to assume that this is the right entry. Even though there's this demand here that I can take, I'm not going to assume that. It's dangerous. I wait for price to then, I already had it marked, but I wanted to see if price is going to push up to close a body or not. If price, because this could have just been in sweep and it comes lower because there's a trend line, one tap, two tap, and this should have just came, third tap, and then react and then take them out. So that's why I wouldn't take it unless a body is closed. So I waited. And what did price do? So one leg, retrace, two leg, induce. So it's not really the completion of the second leg. Slight retrace, and then pushes. Now the full body is closed. Right here, I have the full body closed right here. Now I say, okay, my two leg is complete. Now I need to identify a sweep. Something needs to get swept. It's not just going to come down mitigate. No, it has to sweep some sort of liquidity of people who entered that move. They need to be taken out and be left out. So what happened here? This was the last retracement low that led to this high that caused this BOS. So I understand that this zone, we've only tapped in 50%. Price can either sweep this low, or sweep this low, but still respect this zone because look, I had an inducement here. So I say it's important to make sure your zones, there are inducements. I had a sweep right here where price gave me a sweep of this last low, retraced, came back, induced it, and then pushed up with this momentum candle. So I know this zone is safe now because it's giving me a two-leg protocol or a change of character breakup structure. Well, the breakup structure happened here, but the change of character. So I position myself for here and I covered the entire low, 3.2 pip stop loss. On average, my stop loss are about 3 to 4 pips. I'm not taking a lot of 7 pips and a lot of 6 pips. Majority of them is going to be like within 3 pips. So 3.2 pips, price came in, mitigate, and flies off. News came right around here. I believe it was 10 o'clock news. This is all the news created, just this little wick. I said, okay, price is still strong for the bullish move. And the price comes down, and then I see this low that led to this high break structure. It came down, and I said, I'm going to take this mitigation because we still have this trend line to target and this previous high, and we didn't mitigate or anything that's equal highs right here. So I took this trade to buy up to enter into this zone. I wanted to target here because I don't know what could happen here. 1 second, guys. Uh, Okay, so this is why I targeted this range right here because I didn't know what would happen in this zone. So one leg, two legs coming off of a high time frame demand allows me to take this first entry, targeting a 1 to 3, close to 1 to 4. Because price did continue, and I know that I was not at my range, this low led to this high, breaking the structure. I know this low is now protected because it's also an inducement low. There was an inducement made. So I know it's protected. Just like this one, there was an inducement made. It's protected. I was able to confidently enter from here and target a same 1 to 3. In case this one didn't make it and it stopped, turn around, I said, let me get out of this one because then I would at least profit from this and then I'll let it go. So I took it to half of the trend line because there was still a supply here. This is a high that led to this internal low that broke this structure. Price could have reacted from here. So that's why I still got out right here. So you always want to get out at the next level of liquidity. So when price mitigates here, though I see this could fail because there's still trend line above it, this supply, I wait to see what will happen because it is still a high time frame supply, a 15-minute supply. So when price comes into it, price does this reaction, pushes up, does a sweep, an inducement right here, and then you get a change of character, retrace, break of structure. That's literally what we just said right here. High time frame, either a two-leg or a change of character break of structure. I said, man, I'm just gonna try it. Even though it could just be a fake, I'm gonna try it because I have this trend line to the bottom to target. I've fulfilled phase 2 by retracing here. We've only kissed the daily demand. There's so much more liquidity internally to take. There's an equal low right here. So that's how I built my confluence is to say, you know what, I'm going to take this risk still because it aligns with my trade confluence. That's the only way you're going to build trust in your trade confluence. You have to take every trade that aligns with it. That's why you're going to gather the data to know how often, what's your win rate with that confluence, that list. And that's how you're going to build confidence in it if you take the trade every time you see it. Not saying that it's going to hit TP every time, because that's how you gather data. Are you a 30, is this system a 30% win rate system? Is it a 50% win rate system? Is it a 10%? But you have to take every trade on it to kind of get that data. So I took it. So change of character, break of structure, everything in alignment. It's within key time window. I got mitigated at 1050. It gave me the mitigation of a high time frame supply. All was there. I have liquidities to target, smart money trap to the downside. I have equal lows. I have imbalances. I have everything to target to the downside, trend line. So I took it when it retraced and mitigated this zone. I believe it was a 3 minute or 2 minute supply. Where are we? It was a 2 minute supply right here. And I took that trade right here. Or was it 3 minute? It might have been a 3 minute one. Oh yeah, 3 minute supply. My apologies. It was a 3 minute supply. That price left. Sheesh, this thing moved too fast. This 3 minute supply, that price left after the BOS, came back. I took it from here. What is it? A 2.3 pip stop loss. Very small. And I targeted 1 to 5 just to target the low because price could have still came in here, induced this low. Because remember what I said, if price is not actually going to be bearish, let's say still wants to go higher, it still has to come sweep the next level of liquidity in order to do that. Because then that's what a smart money trap does. Smart money trap has to sweep liquidity. So the next level of liquidity would have been either this trend line or the low that led to that high. Price would have came, it could have swept it and then continued bullish. So that's why I TP'd right here.
Yo, Sauce, can you hear me, bro?
Yeah,
Uh, just a quick question. Why wouldn't you cover the high of the first leg?
this high
Yeah, exactly.
is protected. It's a protected high. It's protected by this high that caused, where is it? Where am I? Uh, See, this high right here that did the inducement inside of the mitigation, it did a change of character. This was the retracement that mitigated it and caused a break of structure. If it leads to a break of structure, chances are price could have done one of two things. It could have came up and swept this high and mitigated above here and then pushed down. Could have. But the simple reason why I still took it from right here is simply because the chances of price doing that, it has to have like a clear order block. There was nothing clear in this zone that price needs to retest. It already mitigated it. This was the 3 minute supply right here that price already retraced and mitigated. There was nothing else for it to mitigate. So that's the reason why I
Okay.
over here,
Yeah,
especially
that
when
makes
we had an
sense.
inducement. This inducement protected. This inducement let me know there was a lot of liquidity that was pulled to make this move, and this break of structure confirmed it. So I don't need to hire here. But now if it was a two-leg protocol, let's say this was one leg, two leg, right? At that point, yes, I'm covering this one simply because I know that it has to be one inducement if there was an order block above. But there's no order block. There was nothing. There was no other form of like liquidity for price to target. Even on the 2 minute, as you can see, price came back and retested that zone already. So it doesn't need to come back higher again. Okay, so that's why I took that trade and I TP'd here. And the Friday's trade was similar. I got out of it early, simply because it did not. I didn't have confidence in it because it didn't align with my trade confluence. This supply here, I marked it as a smart money trap because I wanted to see it fail because there's equal highs above it here in this trend line. But the reason I took it is because I saw a two-leg protocol, which was one leg, two leg. It broke a body and price came up and it induced this zone here. Sometime, yes, it'll come induce a level, like I said before here, if there's a supply above it or a demand, depends on the direction for it to mitigate. But in this case, there wasn't any. It already mitigated it. So therefore, it's probably going to create an internal high, push away, and then sweep it to then take it, which in this case was this little internal equal highs. It created this internal equal high, came down, and then came up, induced it to mitigate me and push me down, which was on a 2 minute. It was a 2 minute supply right here. This 2 minute supply. So you can see the equal highs right here. That price created, pushed down, induced it, mitigated, and flush. But I wanted to target the lows of this trend line simply because I want to see this imbalance fail and this zone as well. But I didn't want to take the trade there. I just want to see my trade get to this low, which it didn't. At around like this time, I think it was like 4-ish, 4:20, 4:30 when I sent you guys that second message. I ended up closing it because it's Friday. Sessions are about to end. And I didn't trust this zone because this is not a high time frame supply. This is literally a 1 minute supply. It just was a high that led to a low that caused a break of structure. Price retraced, came back down, and price had swept this high in order to mitigate. I said, okay, let me see if I get an entry model, change of character or break of structure. So I got one leg, two leg with a body close. We didn't mitigate no demand or anything, and it retraced. So that's why I took it. Simple as that. But like I said, as you can see, because everything in my trade confluences wasn't in alignment, You see how it failed. I mean, not failed, but like you see how it didn't go to my TP. I didn't have no high time frame. I had time base, I had the two leg, but I didn't have the high time frame. And what was the result? I'm in consolidation. I didn't go to TP. So that's why it's very important. I even said it, highly important to have all three. And yet I didn't have all three, and I took the trade as a test to see, oh, let me see, because I saw the session. But is that an A+ setup? It's not, because it's not a high time frame supply. So the better version of me, the more disciplined version of me wouldn't even take it, would just let it go. But the version of me that says, okay, I'm in profit for this whole week, I saw the trade, let me just take it. That's the reason why I ended up taking it. So I wouldn't say for you guys to do the same, but that was the reason why I ended up taking that trade and for the session for this week. Let me quickly jump on the call through my phone. I'm gonna answer the Q&A on the road. That way you guys can share your screen, and then whatever question regarding the chart, you could just show it to me on your screen. Let me stop sharing. Actually, let me join in on this one. Okay. Okay, let me stop sharing first. I think that's what's causing that.
Yo, what's up, Sauce?
Yeah, what's going on, brother?
Can
You
you
got
hear
a
me?
question? Yeah.
Um, yeah, I have one question left. The thing is, right, I wanted to ask this question about unintentional movement, like how, like, because I don't know how it looks like. Really, can you show example kind of charts before you take a walk?
Yeah, give me a second. For the chart one, maybe a bit more difficult to show because I have to, man, I can't figure out how to stop sharing the screen, but okay. Yeah, unintentional movement is more so like this, for example. It's basically a price action that just doesn't make sense. Like, for example, you see, anytime you see me mark these little circles like this, those are unintentional movement that I anticipate price to take out. So here, we're bearish. Then price give you this fake bullish, come down. It's like it's trying to go up, but it's having a hard time and just keep pushing down on like in a way where it doesn't look aggressive and is leaving liquidity. So I expect this to get swept before the real move happen. Usually happens right at the entry of the session with London, Frankfurt, for example. You see 1 o'clock. Frankfurt is telling you it wants to go bullish. It goes bullish, but it reaches this high time frame supply. So this was the unintentional movement to create the idea that we're going to go bullish because it breaks structure. So what is everyone taking? Retracement, mitigation of this zone, and push up. So what did price do instead? Sweeps it. Retrace, mitigate here, and dumps. Why? Because it came to a high time frame supply. Give you one leg, two leg, breaks, come back, retest, dumps. So the high time frame supply plus your entry model invalidated this zone because this low that was created at the lower Frankfurt, yes, it led to a BOS, but it wasn't a BOS that just didn't mitigate anything. It was a BOS that mitigated a high time frame supply that came from a high that led to a low, that a lower low that caused a BOS. So this one holds more precedent than this small internal BOS. You get me?
Yeah, I get you. I get you. I get you.
Okay. Okay. Cool. I really don't know how to stop sharing my screen, guys. For some reason, my chart is not okay. There you go, right here. Stop sharing because I want you guys to be able to share your screen. Okay, so let's go ahead with the questions, guys. And I'll try to answer some. And I also want some of you guys to share your screen. If you have a chart related question, you can just show me on your um you can show me on your screen. That way I can get a better understanding for your question. Give me 2 seconds. Okay. Mandatory condition within the active session or can transform without entries. Okay, let me make sure I understand your question. Is okay, Asaya, can you open your mic? My just went out. Give me 1 second. Let me make sure it reconnects so I can get that question from you. Asaya, I want you to ask your question or verbally so I can better understand it. But give me 1 second for my signal to clear up. Is it better now? Okay, perfect. Yes, Asaya, could you ask that question once again, please? Because I don't think I quite understood. If you could unlock your mic.
Can you hear me?
Yes, I can hear you.
So you said an inducement has to happen during the
Say that.
session. Let's say we're in a London session. So do we have to wait an inducement to happen for you to take a trade?
Okay. If you're in a London session, do you have to wait for an inducement to happen to take a trade? Not all the time. An inducement aids your entry. It's gonna give you more. It's gonna push the move better than a mitigation would because it depends. If the London open, right, and there hasn't been a relevant sweep of liquidity, then chances are the move is not ready yet. The market condition is not ready. Market's probably still building liquidity. Remember that liquidity is the driver. So if there was no sweep of any liquidity, meaning if there was no sweep of Asia low or Asia high, if there was no sweep of Frankfurt's unintentional movement, then chances are the move isn't ready yet. Price is just building that liquidity. You get me?
Yeah, I understood. Thank you.
No, you're welcome. Anyone else?
question related to
Question.
the sessions. Yes.
Okay, I have a question, right? So when you marking out your structure points, right? Do you like mark out the significant highs and lows, like the 15-minute and the 4 hour and the 5 minutes? Like you only mark out those,
For my high time frame?
or do you start from the 4 hour till the
Are you
high
saying
time
for the
frame
high?
and low time frame also?
Okay, see, so yeah,
No, I'm
when
saying
I
like for
mark,
both. Say for instance, mm,
I'm listening. Go ahead.
okay, okay. So look, like 4 hour, right? You mark out the 4 hour, the highs and the lows, right? You go to the 1 hour, you mark the highs and the lows, like those, and then you keep on scaling down to the 50-minute and the 5 minute, like you do in that order, so you can understand where price is.
Yeah, in the beginning, that's what I did. I'm always using the highlighter tool on every time frame in the beginning. As you get better with understanding structure, you don't necessarily have to mark all of them the same way. Now I don't really necessarily mark the 4 hour. I just usually mark like my 15-minute structures. Sometimes I'll mark out my 1 hour. Um, but I don't always mark out the 4 hour. But for someone, let's say you're in the beginning stage or you're still trying to understand market structure, yes, I would recommend you mark it out from every time frame. Do your 4 hour, do your 1 hour, do your 15-minute, because the structure, the highlighted tool, is going to allow you to see that.
Oh,
You know what I mean?
okay.
The highlighted
Yeah,
tool is gonna
I
allow you
get.
to see your structure. So if you feel like you're still trying to get a better understanding of market structure, do all those time frames, 4 hour, 1 hour, 15 minutes. And then knowing that those are
It's,
your high time frame supplies and demands.
yeah, it's because, right, when I usually mark out these zones, and then you come to the lower time frames, and then all of these, these highlighters, like they pile up and they make your chart look
Yes.
messy, and then it confuses
Yeah,
you most of the time. You see,
I know what you mean. So
you
there's
see.
on your settings, there's a part where you can choose a
Mm,
visibility. You can go to, after you select,
mm,
you put the highlighter tool, you can go to the setting of that specific dot that you made, the highlighter, and you can select the visibility, the
yeah,
time frame you want it to show on only. So that's why you see I have different colors for different time zone frames. In the beginning, if you look at my old videos, I used to have different colors for different time frames. My 5 minutes was like orange, my
yeah,
15 was brown, my daily or hourly was purple. Like I had time frame for everyone. That way, when I reach a certain area and I see that color, I know what level, what time frame this low or this high is coming from. So it'll remind me, or it'll allow me to know how strong it is. What are the reaction point? What can I expect from it? If you get what I mean.
yeah. I
So
get it. I get it.
that's what I would recommend. Use the visibility. Still mark all of them out. I know you say it looks crazy, but bro, trust me, it starts crazy right now until you understand market structure. So you have to mark all of them. Just use the visibility so you can allow your chart to look cleaner as you go in different time frames. If you only want it to show up on your 15-minute and under, that dot you made for the 15-minute, just select 15-minute and under. So when you go to the 30-minute, you won't see it. When you go to the 1 hour, you won't see the structure of the 15-minute dot. You will only see the ones from the 1 hour, and so on and so forth.
Mm, okay, okay, okay.
Yeah.
Okay. Let's see next question.
Any other question, guys?
So you had promised to show us the piano template.
Yes. So I don't have it on my phone because I'm doing a pickup right now for my friend just arrived at the airport. But what I'm going to do is I'm going to drop it in I think we have a resource tab or something tab. As soon as I get home, I'm gonna drop it in there for you guys. It's basically a um, a Google Doc form of uh, of journaling. It's a Google Doc journaling that Mika created. It's very nice, and it aligns with everything. It asks you basic questions like how was your session began? Did you pray? Did you exercise? Did you get good sleep? All the different things. Are you tired? Like all you got to do is select. You don't have to do too much typing. She made it with the intentions of not making journaling feel like a chore, making it feel like it's a lot of work. It's simple. It's just like click, click, click. It's like as if you're doing a survey. The only time you're going to be writing is when you're writing, why did you take this trade? You just basically write your basic information, whether it was you had your entry model, or whether it was change of character, breakup structure, whether it was two-leg protocol, like what was your entry model? Like those basic things are the only things you're writing, and it's not a lot of writing. It's just very like keywords. And then it's gonna have you put.
Mugambi atijje waggaleyo.
So I'll drop that in the Discord once I return in about another half hour to an hour, and then something you guys can start using as of Monday. I think it will be very, very helpful because that's what I've been using, and it has kept me consistent with journaling because it's so simple. Like it doesn't require me to do so much. Okay. Any chart related questions, guys, or anything else? Does anyone have something on their chart they want to share? Can someone? Yeah.
Hi, Source. It's me, Naila. How are you?
Hi, Layla. I'm well, thank you. And yourself?
Good. Yes, I'm very well, thank you. Thanks for going through that. That was an awesome week you had, catching some pips. My question was with regards to managing a trade. So I have two questions that I'd like to get your view on. First question is when executing, sometimes it doesn't, you don't enter at the specific price point that this is again under the assumption that we're manually executing. Sometimes your entry doesn't enter at the specific price you want to, as you've set in TradingView. Now, when we take 1, 2, 3 partials,
Yep.
say your entry is at a lower price and you have to extend your stop loss, your R to R ratio gets affected, and therefore your 1 to 3 point, the position of the 1 to 3 is lower, it extends. So my question is, should we maintain the same 1 to 3 level as we had originally analyzed on TradingView, or should we modify that? Because what tends to happen is that my risk to reward ratio gets affected, and sometimes it doesn't even reach to 1 to 3. So I take partials much later. What is your take on that? What do you do?
Yeah, I think sometimes it's the broker that does that. Sometimes the broker's candles don't align with the same one as TradingView. So you sometimes have to factor in a couple pips so that way you can still get in the trade. What I would say is if you're already in the trade, don't move your stop loss. Like that's just law. If you're in the trade, you move your stop loss to make it smaller, and price comes back and take you out, and you're like, man, I could have just kept my original stop loss. They respected the overall range. You're gonna be salty about it, and you're gonna feel psychologically it's gonna mess with you. But if your overall target wasn't 1 to 3, but it's giving you like a 1 to 2.7, 1 to 2.8, 1 to 2.4, 1 to 2.5, it depends how dramatic the difference is. If it's only a difference of a couple $100, it's okay. It's just a couple hundred, that's fine. But if it's a difference of like from a 1 to 3 to like a 1 to 1.7, that's different. That's 1,300 you're leaving on the table, and that was all because of the broker, etc. You got to extend it. I would only extend not the stop loss, but extend my TP if there are levels of liquidity to get further than that zone. So if my TP range was a demand, but I see that under this demand, let's say I see that this demand is a lower low, and I know that you don't buy from lower lows, then I'm like, okay, I'm going to target through it because I know it's going to fail. Or if I see that price is coming to a imbalance, but this imbalance has a lot of liquidity underneath it, or equal lows and trend line, more trend lines, then I'm like, okay, I'm going to keep targeting lower just so I can fulfill the 1 to 3. So basically, instead of targeting the first level of liquidity, I'll target the second level of liquidity and kind of go from there. You get me?
Yeah, I do get you. Just to sort of refine my question a little bit, it's more the case of when we're taking partials and my 1 to 3 is far lower than my original analysis on TradingView. So I
I
guess
see.
Yeah, do you get my question now? So it's almost like, do I adjust it according, do I keep it the same as what I originally analyzed on TradingView where my entry point was at that specific zone, or do I modify it, extend my 1 to 3 far lower than what it was originally set at, and risk the risk, take the risk that it might not even reach to the 1 to 3?
I see. I wouldn't even. I would. You could because it was a manual trade and you're just managing it. If your TP is like a 1 to 6, and you know the overall that's where you want the market to go, or you're seeing that the market should be going,
Mhm.
yeah, that's fine. Just modify it, take it lower. Like sometimes I take partials and it's not even a 1 to 3. I ended up taking it like a 1 to 4.2. You know what I mean? So sometimes price is just moving so aggressive that you know it's gonna go past beyond the 1 to 3 range that you can just say, okay, I'm just gonna hold it longer.
Yeah, so
You
you're
know what
not
I
as
mean?
rigid. Hmm.
Yeah, be flexible. I would say be flexible with the session because the key is to make money. And if you're
Yeah.
positive, you're in profit, and you have a target. You especially if you're doing a prop firm and you're trying to pass, and you're like 5K away from passing, and right now you're floating about 1,300, or you're floating about almost 3K, and then on your broker you reaching 1 to 3 on trading view, and you would have taken 1 to 3 already, but on your broker you're only at like a 1 to 2.2, 1 to 2.4.
Mhm.
Do you want to take it? That's probably where you question, like, should I wait for this extra 800, or should I just kind of? It's all subjective to the session you're in. If you see that price has much more liquidity to go, or it's not approaching no significant demand or something like that, there's nothing that just to come back. It's not about to make a significant inducement. Like if you don't see nothing like that, I'm just gonna wait for the extra 800. But if I see that, okay, for me to, I'm already closing up on a low that led to a high that caused a BOS. Even though I want to see price take it out as a smart money trap, there's a chance that price may induce it and then turn around. Then I'm like, okay, I'm just gonna take 50% off with this 2,200, and I'm just gonna let the rest run, type of a thing. So it's all subjective. You know what I mean? It's not really fear.
Yeah,
It's just more so managing because the goal is to make money.
of course. Yeah. And just to follow on from that question, before I ask my second question, um, with regards to M1 shift, say
Yeah.
there was an M1 shift that has occurred before reaching before reaching 1 to 3. Would you break even at a M1 shift, or would you specifically wait to 1 to 3?
If the week started, I haven't made money yet. I'm at break even in my overall account. I'm gonna take M1 shift at the minute price passes it before 1 to 3. If I'm in profit for the week, I'm floating or I have floated some money and I'm trading from profit, I'm gonna wait for M1 shift at 1 to 3. Because what we know is if we go M1 shift immediately after price goes through it, there's a chance that the market might revisit that
Yeah.
range and we can get taken out. So if I know I want to be a part of the move because I haven't caught any trade, I haven't floated nothing this week, and I just want to take them, but I don't want to be left out, or I don't want price to reverse on me and put me in deeper drawdown, then I'm going to move to M1 shift immediately so I can protect myself, but at the same time, I was a part of the move. But if I'm in positive for the week, couple thousand or a couple wins for the week under my belt, then I'm gonna wait for the 1 to 3 because I can afford that risk to wait. And if it does take me out, it is what it is, type of thing.
And just to clarify, when you say you're going to take it at the M1 shift, are you saying you're going to take a profit at M1 shift, or are you just breaking even at M1 shift?
No, move my stop loss. My bad. I apologize.
Oh,
Move my
okay.
stop loss to break even is what I mean.
Yeah, perfect. Understood. Yeah, no, thanks for that. Sorry, my second question was regards to news, management around news. So, do you have, I guess, do you have any rules as to whether you would hold a trade during news if you're in a significant amount of profit, or do you just exit before news
Yeah, I
and
hold
just
trades
close
during
the
it.
trade?
If I'm in a trade, if I'm in a trade before news, I'm holding it.
Yeah.
Yeah, only time I'm
It
gonna
re
get out of it because
Mhm.
remember the news is supposed to push the market where it needs to go, where it's intending to go. If you look at the past news we've had, all of those news, the big ones, I would say, they've pushed the market down. Like it
Yeah.
was trying to go down, even, and then price did what? Retraced to take out the high of it, and then overall it ended up going down. So the news is always going to show you. You can use it as like a GPS. It's going to show you which direction the market wants to go. So if you see the news is wicking strongly down, but it didn't take you out, and then you're back in positive, chances are it might spin a block on you later on to take you out because that low of that news candle has to be taken out. But when I'm in a trade, if I got into the trade like the buy that I showed you guys, I got into the buy, and price mitigated me, pushed this was on Thursday, I believe, mitigated, pushed me up. I was targeting Asia high, but it didn't get there yet. News came, news pushed price down back into my entry zone, and price pushed right back up again to go sweep the high of the news candle before taking a low. So what did that do? It kept me in a trade. I didn't get out, even though the reason I didn't get out was for different reasons. But the fact that I was in a trade before news, even Yurimi always say, if you're already in a trade before news, it's okay. Because if your bias is correct, the news is only going to push you to TP faster.
Mm-hmm. And you're not
Yeah.
afraid of spreads taking you out, or
Well, it depends on the news, by the way. Let me not just say anything.
yeah.
It depends on the news. Because if it's the big news that's supposed to, what is it, the NFP or one of those big news, then yeah, I'm getting out. I'm not even going to trade. And it depends on the time, too. If news is at 10 and I'm in a trade at 9:30, within 30 minutes, I'm going to see where price is. If it's still consolidating and news is approaching and I haven't really moved nowhere, I'm going to exit the trade because I don't know what news is about to do. It might take both sides out. But if I'm in a trade, news is pushing up and I'm close to my TP, I'm probably like 5-6 pips away. News is probably just going to wick me into TP and then go the other way or vice versa. So I'll hold it in that case. But if the news is at like 9:30, 9:45, or 8:30, well, 8:30 we wouldn't be trading, but anytime within like close to my entry, and my entry model was given to me at 9:40, but the news is coming out at 9:45 or 10 o'clock, then yeah, I won't take it because it's too close to the news time, and I'm probably not going to get enough price action, like moving away from my entry, in order to say, yeah, news is going to push me that way. So it's very subjective. You've got to be flexible even with that. Learn the news, like learn certain news and see what they do. So you want to pay attention to that. Oh, this is just PMI. Okay, it does big things. Oh, this is just unemployment. It does this much. Once you start realizing what type of price action certain news does, it makes it easier for you to know which one to hold trades through and which one not to be a part of.
Yeah, very true. Perfect. That's clarified a lot for me. Thank you very much. It's always very helpful joining those calls.
Of course.
Okay.
Anybody else, guys? I think we have a TPC Zoom call that's going to start for psychology for the other guys in the university. So let's get some more questions in, and we'll probably end the call.
I just wanted to share I have some questions, and I'm going to share my screen.
Go for it.
I think everyone, you can view my screen, right?
Yes, I can see it now.
A question which I had was, this was phase one. If price goes down, phase one, phase two. This is phase three, right? Then I was asking, can we take a trade?
There's another someone else. Can you mute someone else's call? I couldn't hear you clear.
Pardon?
No, I can.
Oh, so I was asking a question. What if in phase one we break structure, and then can we take a trade in phase two when even if price didn't mitigate anything here?
When you say take a trade on to fulfill phase two, or take a trade after phase two is complete.
To fill phase two.
Yeah, if you get a proper mitigation from the low that caused the BOS, let's say if you get a proper mitigation, or you get an entry model, i.e. like a change of character, break of structure, or a two-leg protocol, of course you can. That's the beauty of trading Forex. You can capitalize on any direction. It doesn't matter.
But there is no mitigation from this side.
If there's no mitigation, then you want to see if you have any of your entry models. Is any of your entry model present? Do you have a two-leg protocol? Because remember, it may not be a mitigation, but it might be an inducement of something. So sometimes an inducement can work similar to can work like a mitigation. That's if the inducement is a significant level. Like you might get a significant an inducement, like for example, a medium inducement. A medium inducement don't always mitigate a demand or a supply. Sometimes it just ticks that wicks that zone, and then it flies off. So sometimes an inducement can give you demands and supply zone reactions, but you just want to make sure that you get your entry model. If you don't have your entry model, it's risky. Even that trade right there you're asking me about, if, for example, it didn't lead to a BOS to the downside and price just did an inducement, you took the buy up thinking it's going to be phase two, you could have got it taken out as well. So it's very subjective. That's why you have your influence list. You want to be able to read that list and say, okay, is everything on this list in alignment? If you're missing one, you don't want to take that trade. I showed you one trade that the one time that I was missing one and I took the trade, I ended up in consolidation. I didn't NTP. That was yesterday. So it shows you how powerful that list is when you know and you align everything together. I can hear you if you're speaking, by the way.
Oh, all right. Thank you. I do understand.
Okay. Did that answer your question though?
Yeah. I
So
thought we only trade during the mitigation. That if we strip the click, we do not have to trade.
yeah, well, in this case right here, if there's no mitigation, based on the trading confluence list I showed you, we wouldn't take that trade because we want to factor in the time. Or is that move happening within our time window? You want to ask yourself that. Is it happening within the session time? If it is, then you want to ask yourself, well, did you mitigate any high time frame demand before this buy happened? If you didn't mitigate any demand, then there you go. That's your 1x out of the 3 that says highly important to have. So that would disqualify that trade. Even though you see it fulfilled that slight retracement, it will still disqualify it because that's not your A plus setup. You get me?
Yeah, thank you very much.
Of course, my man.
Okay. So, Sauce.
Yes, sir.
Okay, yeah.
I can hear you.
Yeah, this actually really bothers me. It's based on my chart, and I took a trade on gold. It's similar to Nali's statement. So basically, the confluence aligned, but the problem is I did not see price tap equal level of demand, so it made my setup invalid. So I saw the setup on gold on London session, price swept liquidity and came to a chain of character and structure, and then after that price like mitigated. Retraced, I entered the trade, right? But then I did I just set my stop loss by the supply, like the ending of the supply. I didn't add it to the protected eye, and then I end up getting stopped out. And then after that price started retracing. I can't share screen, but because I'm carrying my phone, my laptop, you have issues, but I want to see this can work.
Okay. Or use
I want
you
to
turn
see
your
the
camera
video can.
if you can.
Let's see. Okay, I'll try.
Yeah.
Can you see?
Yeah, I see it. Okay, cool. So you had
so like I said, right?
Mm-hmm.
Yeah, I'm gonna show you just example quick. So I was like basically on the 5-minute structure. So I noticed price stepped into this demand level right here. I noticed late because I was so in a hurry because I was going somewhere that I forgot that price stepped in here. And then I saw price give me a chalk in the break of structure. And it induces level, right? It induces level, Asia high got induced. And then I noticed on the 1-minute structure, right? Price gave me a break of a change of character and a break of structure. So I entered off this zone right here. And this actually kind of pissed me off because it was a necessary loss based on Nali's statement. I'm gonna get there. And the thing is, right, I got stopped out right here, if you could see, just here, a week. And then I saw price was inducing this level. So I knew this is a protected tab because price literally induced here. So I knew for a fact price can't just it wowed price shoot up during key time frame. So I told myself if price retrace, I'm gonna enter off here manually. So I entered off. And the thing what actually really pissed me off is I target the impulse candle. And if you could see it was like a 1 to 4 RR, right? And when I like get in like when I increase
I
my
see.
stop loss, and then I want to like target like a 4 1 to 3, and the fact is price came into the impulse candle where I was anticipating to get out of the trade before then,
Mm-hmm.
but since I increased my stop loss, price like just it didn't even come onto 1 3. It came to the zone where I was anticipating, and that like literally pissed me off. And I know it's
What
like bad to get angry when you like, yeah,
one thing I could see already
they say,
from one thing I could see already from this, man, is that price didn't, even after that inducement, price didn't give you no entry model. It didn't give you no two leg. It didn't give you no change of
wait, I'll
candle
show you.
structure.
Yes, I want to show you. Yes, wait, this goes on a 1 minute. 1 minute. Yes,
Yeah.
yeah, sure. Now you could see right here. This was the first one, and this was the second one. This one and that one. So
Okay.
then I knew
So
price was like,
that's
and then,
so one leg, two leg, price pushed down, came back, and it induced the high of the one leg, two leg. It
yeah,
induced the third leg and then pushed out. So yeah, so the low that led to that
yeah.
high, go to, you see to your left, that low that
And
led to that
then
high.
I like I entered from here, then price just, but
No,
I was
here's
lipped
what
with,
I'm
yeah.
here's what I'm showing you. It wasn't a bad look. It wasn't a bad look, but
Mm,
look at that low that led to that high internally, that internal
this one,
low. Yeah, that low right there that led to
yeah,
that
okay,
high, and then price
yeah,
gave you the two leg, right?
clear,
And what did price
yes,
end up doing? Price ended up sweeping that low after the two leg, right? When it came back.
yeah, yeah.
That's your TP range.
So
Your
like,
target, remember, you want to target the next level of liquidity.
like this one right here, right? This,
Yes, that's the low. It's a consolidate. It looks like some level of equal lows, and it also looks like consolidation slightly. So remember, anytime
yeah,
price reacts from a zone, you don't just want to assume that this zone is supposed to lead to everything. First, you want to target the
okay,
next level of liquidity. Why? Because you know that this next level of liquidity can be an inducement, then price can turn around. Price can just come down there just to get liquidity and say, all right, I'm going to continue.
mm,
You don't want to say, oh, price is going to go all the way down now, because if you look at your far left on your higher time frame, the overall direction was bullish. The
yeah,
market was bullish.
yes, yes,
So what you
yeah,
were
and that's
taking was a
what I
counter trade.
ignored basically. Mm,
Yes, you were taking a counter trade, and then whenever you're taking counter
but
trades, you're supposed to TP at 50% of that retracement, because you were taking a retracement because that low led to a BOS internally. So that counter trade for you was simply just to
okay,
get you to sweep that liquidity and continue bullish. So you have to read the market for the next level of liquidity and not the home run TP level. You know what I mean?
okay, I see. But it also affected my
Right?
like my risk reward ratio. That's where I was like increased it. So
Yeah, because if
yeah,
I see the two leg you saw. So that was not, if it's within your key time price, like you said, came into that high, did an inducement or mitigation and pushed down and gave you that two leg. Had you entered that two leg from that protected high that you saw as you marked it, from that
mm,
retracement that mitigated, and you targeted the low that led to that high, you would have been hit TP. I think that would at least give you like a 1 to 4.
yeah,
That would have been that would have hit TP. So the
okay,
move was there. You just, because you had a bigger stop loss, you try to target lower, and because
yeah,
your stop loss was
mm,
bigger, and because of that, it forced you to be in a trade longer, and then you ended up getting taken out.
yeah, immediately.
Yeah,
Yo,
yeah.
yeah, thanks.
No worries, man. All right, guys. If there's no more questions, I know we have the TPC psychology call that started. Um, I know some of the guys in here, the girls in here too, are in that group, so they're gonna be joining that call. So I'm gonna end the call, and I'll upload this call once I get home so that we can review it on the YouTube. I hope you found some good information from it, and I'll see you guys hopefully next week on another call. Take care, guys.
Thank you so much. Thank you so much.
For sure, brother. Later, guys.